All right, hello everybody. Welcome back into the NASDAQ Option Superstars program. Wanted to get a video out here today just highlighting our open positions that we have on from the last few weeks, walking you through what we plan on doing with those here as we get further into this current week. And then we'll also take a look at some things that we have in the works for the next few days as far as new trades go. Well, we've been talking about this market the last few weeks about how noisy it has been. You can take a look at this daily chart of SPY. This is the S&P 500 ETF. If we go back in time, you can see even going back into late spring, early summer, we had some great trending moves in both directions. We had a big move higher. We had a really nice pullback followed by another move to the upside. Contrast that to what we've seen over the past few weeks. You can see how noisy this daily chart has been. We've had good movement intraday. We've had some really big range intraday. We have not seen that movement continue into day 2, 3, 4. We haven't had any long-term trending moves develop. The reason I point this out is it will certainly continue to impact how we're trading, the types of positions we're putting on. We've been using a lot of vertical spreads here lately. We've been going out to the September monthly options in many cases. We're trying to react to what the market is giving us. As much as I would love to force the long calls and long puts to work all the time, this is not the environment to do so. You can't make that work if you're not getting good follow through. As a swing trader who's looking to take a position for a few days on out to a few weeks, we need that follow through for a couple days at a time. So what would trigger us? Looking for that transition? Well, a couple things. Number one, if we go back to the end of last week on Friday's session, look where we found support. Any surprise where we found support at? Right on top of that 200 period moving average. You can see that is the 5th time that we have tested that level just over the past couple weeks. And every single time we hold that level. We break below it intraday. You can see Friday, the low of Friday's session. We did try to break that level and then we rallied right back up to close back up above the level. The bulls are defending that level religiously. If we're going to see this thing break down and give us some follow through on the downside, that is the level that needs to break on a closing basis. It's not just enough to break below it during the middle of the day. Now, if that level holds, if we start to see a rally higher, a couple things that I want to see. Number one, we've got a lot of overhead resistance just up above us. You can see this whole messy cluster of moving averages just up above us. That's going to be a tough area for us to break. If we do start to break those, there's that 294 area of resistance that held a couple of times. That's what I'm looking for on the upside. Those are the boundaries that we need to see broken. If we're going to see a trending move develop where we can start to shift our focus to more aggressive long calls and long puts, one of those areas needs to break. If we're just stuck inside of this sideways range, we're going to continue to focus on using more vertical spreads. Again, don't try to be a hero in this market. Don't try to force the market to do something it doesn't want to do. Let the market come to you. A big mistake that a lot of retail traders make is trying to force. You're trying to force the action, right? Trying to force the market to give us those big profits on the long calls, long puts. Well, this is not the environment to do that in. This has been a very messy, indecisive market here over the past 3 weeks or so. I do think we're going to get close. I do think we're getting close to seeing this whole thing break out. And a lot of it's going to depend on the news cycle. Certainly, we've got this whole situation going on with the U.S.-China trade negotiations. But I do think we'll start to see things open up for us a bit here in either direction very, very soon. The volume, last week, Friday, volume was phenomenal. 150 million shares traded. And we saw 70 million shares trade today. So all in all, not a bad number. I mean, we typically want to see things, in that 70 to 100 million share range. So it was a pretty decent number volume-wise, but it was just a very strange session. Let me go ahead and move my data box here. And I mentioned this inside of the Slack group. It's very unusual to see the S&P up 30 points, which it was today. And for a good portion of the day, volatility was actually higher. The VIX was actually higher on the session. Very unusual to see that. In a lot of cases, if you have the S&P up 30 points, in all likelihood, the VIX is probably getting crushed. Now, they did sell the VIX off into the close. You can see the VIX closed down about 55 cents here on the session. But there's still a lot of nervousness out there. There's some uncertainty out there that has come into this market. A lot of people waiting for this whole news cycle to settle down. Everybody wants to see what happens with this whole China trade war that we have going on. So as a result, because of the uncertainty, we had futures down pretty big here last night. As futures opened Sunday evening, we saw a pretty big sell-off. And then the rest of the night, the markets started to recover. And then we had another Trump tweet, and don't even get me started on that here. Very, very difficult when a Trump tweet can lead to a massive recovery with really nothing behind the tweet. Okay, I mean, you can take a look at the news today, and everybody's going to be talking about it. They already have been all day in financial media. You take a look, and basically Trump said that they had discussions with China here overnight. China wants to come back to the negotiating table. The problem with that is China came out and completely denied that. It feels like another situation where another lie or another half-truth, even if it wasn't half-truth, out of the Trump administration, trying to save this market. It's a very dangerous place to be in when they know they're in complete control of this market. Because one little misstep, and this whole thing gets blown to smithereens, and I'm not saying it's going to happen anytime soon, but when this market can move 500-600 points because of one tweet, it's a very, very dangerous position to be in. And that is one of the reasons why we have been more conservative lately. When I talk about trading small size, I mention that to people all the time because as much as I preach it, there's still people out there that are trading way too large of a position size for your account. Trade small. Take small positions. Never get into a situation where the outcome of one trade or one series of trades is going to wipe out your ability to take the next trade. Trade small. Be conservative when the market's telling you to be conservative, and that we're in one of those times right now. I've been stressing that here in the last series of videos. The market is not giving us the green light to get aggressive as of yet. And you can see on the 5-minute chart, here's why. Let me go ahead and pull this up. This is one of the charts that I track intraday, and this is why we didn't do anything new here today. Look at this sideways consolidation. After the opening bell rang, we were in a very tight range all day long. And then we got a little burst to the upside during the last 5 minutes of the session. But very, very tight range all day long. Not much to work with there at all. So I was looking at a whole series of new potential trades. I did not pull the trigger on anything here, just due to this indecisive market that we have. I don't think we have to force it here at all to start the week. Well, we didn't do anything new, but we have a whole series of current positions that are on. So let's take a closer peek at these. For those of you that are new, I update this spreadsheet each and every day on the owner's website. It's also found on the NetPicks app if you're using that on an Apple device. Let's start out down at the bottom. You can see all of the different workspaces that we have here. We do separate the trades by the type of trade. We've got short call spreads, short put spreads. We've got some debit spreads in here. And we do that way you can quickly come in and find the trades that you're interested in. I've got people that only want to trade long calls, long puts. I've got people that only want to trade vertical spreads. And then I've got people that like to do both. So I'm trying to organize the material in a way that you can quickly come in, find what you're looking for. Ideally, I want you to take as many trades as possible. I do not want you to fall into one of those camps where you're only looking at long calls, long puts, or only looking at credit spreads. The power of the system is when you can use both and take what the market's giving us. That diversification, that added layer of diversification is certainly going to help with your long-term performance. All right. Now, with our short call spreads, you can see all of the ones listed here. These are current open positions, and every single one of these has been put on with the September 20 monthly options. And if I go back over to the trade page real quick here, you can see that those September monthly options have 25 days left to expiration. The reason why I went farther out in time with those is to give ourselves more time to be right. Just in case this choppy, sloppy mess continues, it gives us more time to be right on those trades without having to overreact and panic to, get out of trades as we approach expiration. So we are trading a lot of monthlies here. And as I've mentioned in previous videos, all of these, you can see the first number listed there. That's the first strike price. That's part of the spread. And all of those represent our line in the sand. That first number listed there. On CrowdStrike, it's the 100 strike. On Chewy, it's the 35 strike. On Pinterest, it's the 35 strike. Those are the numbers that represent the level that we need those stocks to stay below. Selling a call spread is a neutral to bearish position. So on all of these, I want price action to stay below the first strike price listed here. As long as price action does so, we're okay. We can make money. Now, on all of these, the faster we get a move to the downside, the better. If we can get a pullback in price, that is going to allow us to make money faster on these positions. If we just kind of chop sideways, if we kind of bounce back and forth, if we start to threaten these short strikes here listed, we can still make money, but it's going to require us to be more patient. Because now, if we don't get a directional move in our favor, it turns into more of a play on time decay. And you have to be patient to let that time decay add up in our favor. Now, I reviewed all of these trades here last week, but let's just do it real quick again. That way you guys knew what the plan is. Let's see. This is my training platform, so let me make sure I've got everything listed in here. I believe I've still got a lot of these trades listed, but we'll see. So on CrowdStrike, let's go into CRWD. We've got the 100-105 call spread that we sold initially, and we collected $1.65 or $165 per spread. It's now trading for $1.15. We've got a little bit of a profit on here. Remember, that first strike listed, that 100 strike, that is our line in the sand. I need this stock to stay below 100. It's at 88. We're $12 below our short strike. That's why we started to make money on this trade. Now, why have we not made money faster? Couple things. When I put on a credit spread, in this case a short call spread, I can make money if the stock moves up, down, or sideways, as long as price action stays below 100. I also make money from time decay adding up and from volatility decreasing. All of those would allow the options to get cheaper faster. Well, the directional move, we've had a pretty nice move to the downside. We're $12 below our short strike. That's helped us. The time decay has added up since we put the trade on. That's helped us. The reason why it hasn't moved faster in our favor is we haven't had a huge move lower. And also, the volatility really has not contracted. The volatility market-wide is still elevated. We've got the VIX up in the upper teens. Therefore, this trade is really, at this point, we're making money from the time decay aspect. We also have earnings out, I believe, on Wednesday. Let me just quick check this. I believe it's on Wednesday. Last time I looked. Actually, no. The earnings on CRWD actually out on September 5th. So what I was going to say there is we got to watch earnings because I want to make sure we're out before earnings. But I got that confused, I believe, with Workday, which we'll cover in just a second. So we can continue to hold this trade. As we start to get closer to the earnings number, we'll certainly take action. I'm not going to hold this through earnings. Ideally, if we can get this thing to just sit right here, we're fine. We can work with that. If we can get it to pull back any type of selling pressure over the next week or so, that will help us. And if volatility starts to contract, I'm not really expecting it to if the market moves lower, but if it does, that would help us. So we've got a small profit on this one. No reason to close it out. We'll continue to hold it as is. Chewy. Unfortunately, we tried to close this one out last week. We did not get filled. At least I did not get filled. I don't believe anybody got filled last week, unfortunately. And I'm trying to find it. I don't think I have it saved here. So let me go ahead and go over to that trade page. All right, so on Chewy, again, we're in the September 20 options, the monthly options, and we sold the 35-37 call spread. And we had a really nice move going for us on this one. Until today, we saw Chewy stock up about 4%. We had a move midday to the upside on Chewy. As a result, this thing, it's still working out for us. Our short strike's at 35, so I need the stock to stay below 35. It's at 31, so we've got a nice little cushion in here. Don't get me wrong. But we weren't able to get filled. You can still have the position on. We sold it initially for 65 cents. It's now trading for 35 cents mid-price. We've got about a $30 profit per spread on this position. So we'll continue to hold. I've got a closing order in at 30 cents that remains in place. It didn't get filled on it today either, so I'm going to continue to keep that trade working as well. So no action needed there on Chewy. Pinterest, P-I-N-S, we are in the September 20 options, and we also sold the 35-37 call spread. We sold this one initially for 64 cents. It's now trading for 85 cents mid-price. So we're down a little bit of money on this trade, down about 20 bucks per spread. The short strike's at 35. I need the stock below 35. Today's rally put it back up above 35. We're at 35.38. We need a 38 cent sell-off here. That can happen very, very quickly. Obviously, you can see what happened today. It was up 88 cents. We can see a 38 cent sell-off pretty quickly. A matter of hours. There's no reason to close out of this position. Okay, we still have time. We still have 25 days left. Over the next 25 days, I'm looking for a move back below 35. So nothing has changed here. I'm going to continue to hold the position. We'll certainly let you know when it's time to take action there. So down a little bit of money there on Pinterest. We've got a couple of trades on VXX, and I've had a couple of questions come in on the volatility positions. We've got two different positions on. The first one is the 27.29 call spread out in September. We put this trade on initially and collected 53 cents. It's trading for 73 cents. So this is another one. We're down about 20 bucks per spread. The VIX products, you've got to be patient with them. A lot of times when I put on a VIX trade, it's typically when the VIX is at an extreme, either on the upside or the downside. In this case, we felt the VIX was on the an extreme on the upside. However, we have not really seen volatility sell off in a big way yet. We know long term that when volatility gets elevated, in this case on the upside, it doesn't like to stay elevated for very long. In a lot of cases, it lasts for a couple days on out to a couple of weeks. We're near the longer end of that range here at the moment. We've seen the volatility elevated for about 3 weeks now. In all likelihood, over the next 25 days, volatility is going to contract. If it follows historical trends, when volatility gets elevated, a lot of times it'll try to pull back relatively quickly. They'll suck the fear out of this market. So I still like the positions. In fact, I wouldn't mind adding another VXX position. That's something we may end up doing here this week. There's no reason to close out of the position. I need it below 27. Okay, right now we're at 28.10 on VXX. VXX can move, this is a stock that can move 10, 15% in a session. So you have to stay patient. I still like the position. We need about $1 sell-off here over the next 25 days. So we'll continue to hold as is there. The second VXX trade that we have on is the 28.30 call spread. And this is another one that we put on. We collected 49 cents. This one's trading for 61 cents. So we're down about $12 per spread on this one as well. We need VXX below 28. We close at 28.10 here today. We need a 10-cent sell-off over the next 25 days. So we're very much on the dance floor on both the VXX positions. We'll continue to hold those as is. Still very, very much like those setups here over the next week or two. Amgen. Let's see if I've got this one saved in here. I apologize, guys. This is my recording computer, and this is where I have my training computer on, so I don't always have all of the setups saved in here. Amgen, we do have it saved. I sold a 207.5, 210 call spread. We collected 91 cents or $91 per spread. It's now trading for $1.15, so we're down about $25 on this position. We need price action to stay below 207.5. It has. It's at 205.40 even after a 3% move higher today. I still like this position, and I had a question coming this afternoon. Why are we down money? We need price action to stay below 207.5, which it has. It stayed below that number, but why are we down money? We're down money because we have not had a directional move in our favor yet. We have not had a move to the downside. And when that happens, it turns into a play on time decay. If price action sits right here and doesn't do a thing, we'll make money over the next 25 days strictly from time decay adding up in our favor. Right? So when you don't get a directional move in your favor with a credit spread, you can still make money. It just turns into more of a play on the time decay adding up. So nothing we need to do here on Amgen. We'll continue to hold as is. And then finally, ATVI. This is a trade from last week, and we sold the 49.51 call spread. And we collected on this one. We collected 58 cents. It's now trading for 79 cents. So again, we're down about 20 bucks per spread. Need price action below 49. It is. So just like we mentioned on Amgen, if we just sit right here, I can make money. It's going to turn into a play on time decay where we're going to have to continue to let time decay work in our favor over the next couple of weeks. So there's no problem shouldering here on the short call spreads. There's a couple that are underwater that we're down, 20 bucks per spread on. But I still like the positions, and none of them are at levels that we need to take action on where we make an adjustment or roll the position. We don't have to do anything with these. I still like the positions. We have to be patient in this market that's very, very indecisive. So we'll continue to hold those as is. The short put spreads, we've got a couple of those on. The short put spreads are neutral to bullish positions. So on these, I want price action to stay above the first strike listed here. So on Workday, I need it above 180. Square, I need it above 60. Xilinx above 99. Those represent our lines in the sand there on these bullish positions. So let's take a look at these. Workday. This is one that we've got to take action on here over the next few days because we do have earnings upcoming. And this may be another one that I don't have saved in this platform, so I may have to load it up manually here. Nope, I do. There it is. So on a workday, we sold the 180, 177.5 put spread. We want price action above 180. Price action's up all the way up around 194. So we're sitting okay on this one. This one's trading for 45 cents. We sold it for 80 cents mid-price. So 80 cents gave us $80 of profit potential. We've got about a 50% profit on this one at the moment. If we get any type of higher open over the next couple of days, we'll most likely take action on this position because we do have earnings out on Thursday of this week. So we definitely need to make sure this one is closed out before Thursday. So we're sitting pretty here. My target level's looking to buy it back for between 20 and 40 cents. If you wanted to place a closing order inside of that range, you could, but I'll certainly let you know when we're taking action on our side. So we've got a nice profit going on workday. We'll continue to hold as is. Square. We sold the 60.58 put spread on this one, and there it is. We need price action above 60. It's at 62.80. Definitely helped out today with the rally. We collected 54 cents on this one initially. It's trading for 43 cents, so we got about a $13 profit so far on Square. And again, as long as price action stays above 60, we're okay. We'll continue to hold the trade as is. So no adjustments needed there. We'll just continue to stay patient. Xilinx. We sold the 99.97 put spread. Did see a nice reversal on this one today. We closed about almost $4 off of the low. That certainly helped us. We sold this one initially for 60 cents. It's currently trading right there. So we're basically unchanged on this one at the moment. We need price action above 99. It's almost at 102, so we've got a nice little cushion here. As long as it stays above 99, we can continue to hold. So we'll continue to track this one over the next few days. Finally, on Uber, we sold the 34.32 put spread, so I need price action above 34. This one is massively oversold. We collected 63 cents on this one. We're down about $27 per spread. We need a 70-cent rally on this one over the next 25 days. Certainly can happen. Because it's so oversold, I would not be surprised if we do get a bounce here. I'm not saying the low is in long term. It's just in the near term, we're due for a bounce. We're very, very oversold on this one at the moment. So we'll continue to hold there. And actually, let me go ahead and pull up a chart. Let's see if I've got that workspace up. I don't think I do. So let me quickly load it up and I'll show you what I'm talking about. On a lot of these, if I take a look at Uber here a second, the whole basis for this trade was because the pulse indicator got down to an extreme. We got a whole series of yellow bars here indicating that we're between a 1 and a 2 standard deviation channel move on the downside. We're very, very oversold. We're still looking for a bounce higher. Notice what's happened to price since those yellow bars started printing. We've basically just moved sideways here. We have not really seen any type of a big move in either direction. That's oftentimes what will happen when you get to a price extreme. When you start to see the yellow bars on the pulse, this is what can happen. So I definitely am looking for a move back up above 34 here over the next week or two. So continue to hold Uber. A couple more to take a look at. Beyond Meat. This is one that we've been trying to close out for the last week and a half, and we have not been able to get filled. This one, we're looking for price action to stay below 155. We need a little bit of a sell-off here. We saw a pretty big rally. Beyond Meat was up 5.5% today. Need a move back below 155. We sold this position for $2.73. We've got a small profit on it right now. It's just been a bear. Trying to get filled on this thing has been very, very difficult over the past week and a half. So I'll continue to hold it. I'll continue to keep you posted on what we're going to do here. We still have a little bit of time, and we've got these options expiring at the end of this week. So what I'm saying is we don't have to sit there and close it out here tomorrow morning, but we'll want to watch it closely, see if we can get any type of a move back below 155 over the next day or two. And then finally on AMD, we got long puts on here. Today's rally didn't help us, but we have the 32 puts on these options right here, and we bought these for $2.34. We've got about about a 25-cent profit, $25 profit per contract. So we'll continue to hold here. Definitely looking for AMD to roll back over to the downside. Today's rally did not help on AMD, but you'll notice our portfolio is mixed. It's mixed between bullish and bearish positions. It's mixed between credit spreads. We've got a debit spread on. We've got a long put. I'm trying to mix up the trades as much as possible to take what the market's giving us. Right? We've seen a lot of false breakouts in both directions, right? We've seen a lot of indecisive price action. It's not time to load the boat in one direction or the other. We're going to continue to take a mix of trades until we start to see this market break out with some follow through. So on all of our open positions, we'll continue to hold as is. I will never leave you hanging. I promise you, I will let you know as soon as it's time to take action on every trade. I am looking at some newer trades. I'll talk about that here tomorrow. We've got a whole list of candidates that we can take a look at. Thought we may be able to get a couple of new trades on today. We flat out did not have anything to work with intraday as far as price action goes. We were just in a very, very tight range all day long. So if you have any questions at all on open positions, let me know. Send me an email, mike@netpicks.com. You can always leave me a message inside of Slack or inside of the NetPicks app, and we'll be in touch right away. So I will be holding a Q&A session. I'll get the login details out this evening. We're actually going to be holding it Wednesday afternoon of this week. So I'll get those details out to you all here this evening. So I'm going to wrap this video up. I'll be back with you guys over the next few days with our next recap video.